Oil prices dip and Apple hits a new high. I'm joined now by Jonathan Leff. He's the editor in charge of all commodities and energy, and he's very energetic. And he's here to talk to us about oil prices dropping. This on news that the U.S. is dusting off plans to tap into oil reserves?
That's absolutely right. I mean, these plans basically were hatched a little bit in the spring, back when there was rising oil prices. We had Brent above $120 a barrel. We had a lot of concerns about, as we implement these sanctions on Iran, what's going to happen? Are we going to face a shortage? We didn't. In the end, prices came back off, but now they're on the rise again. And so I think, the White House is bringing these plans sort of out of cold storage. The big question is the difference between dusting off and implementing. And there's some resistance out there among U.S. allies within the International Energy Agency, including the executive director, who said this morning, she sees no reason whatsoever to tap into these reserves. I think there's a bit of a divide happening here between the U.S. and some other countries like Britain, who are more comfortable sort of saying, we need something to kind of temper oil prices, and a lot of other countries like Japan, who are saying, these are really emergency reserves for use when we have a supply emergency, and they just don't see that yet.
Okay, so the flip side is that actually hedge funds are betting that there will be a spike in prices based on the possibility of an Israeli solo attack on Iran.
Yeah, sure. Again, rewind back to earlier this year, and even back to last November, when we had that key UN report that was talking about the inspections and the Iran nuclear program. Both of those times, we saw some hedge funds come out and buy some of these cheap, out-of-the-money options as a way to sort of bet on a big price spike, buying $150, $170 calls. We're seeing a little bit of that now, right? But we're seeing the options market in a call skew for the first time since, I think, February. So it's starting to come out. Remember, we're in the dog days of summer, so it could be September before we see this kind of activity really pick up more steam.
Okay, and I think we saw briefly, we can maybe touch on it again, just the big oil companies right now. Basically, we had a few red arrows, basically sort of looking flat-ish there.
Yeah, we've got the pullback in oil prices, but again, a little bit tame. I think oil traders are going to want to see whether or not the White House gets some traction with this idea.
Okay, Jonathan Leff, thank you so much for being with us. I'm going to move to another Jonathan. We've got two Jonathans. That's very exciting. Hello, Jonathan Marino. He's editor of Reuters PE Hub. We're going to talk about some stocks that are moving at our hot spot here today. Ann Taylor, you a fan? I don't know.
Not this time, but I'll tell you what. Private equity is a fan. They've been buying into some listed retail companies lately. Ann Taylor's most recent numbers suggest that they could also be an LBO target. Remains to be seen.
Up close to 20% today. They beat on earnings, and they've got affordable clothes. They used to kind of do promotional discounts, and I think they've done away with that. Now they just decided we're going to go with the lower priced items. And bright colored clothing. Work for the Gap as well, the colored jeans. Okay, Molycorp down 10% today. They're the world's largest company in terms of rare earth and rare metals, stuff that's used in smartphones and getting on a granular level here in hybrid cars. Down 10%, raising $480 million in debt and equity offering for operating expenses, basically to carry on the business.
Yep. No, they've made a few deals lately, probably in the last 12 months. Don't really expect, I guess, anything soon.
Okay. Let's talk about Facebook. The ongoing story of Facebook, particularly after the lockup expiration yesterday when 271 million shares were available to be traded, hit a new low, $19 and a penny, down 4% today. What do you think? Because this is just the first in what will eventually be 1.4 billion, an additional $1.4 billion shares that will become available.
Right. This is, I guess, kind of the speed bump. We're going to have a really big one coming in the middle of November when all of their employees can start exiting shares. I would imagine that based on performance so far, some people are going to want to liquidate a portion of their position at the very least.
Okay. The company has lost $50 billion right now, so about half its value from where it was with the IPO. What do we have to do? It's Friday. It's Facebook. We go to the Zuckulator. He's down. He's dipped. We have him below the $10 billion mark. Jonathan, this may be first here at 9, and look how much he shed.
Talk about painful.
Talk about painful. And a report out today that he has a history of telling people don't really pay attention to the stock price. But a report out today that he acknowledged in a company-wide meeting a month ago, hey, the stock price is going to drop and it's going to be painful to even address that. Now, do you think that there's possibly some chatter? Could he step aside as CEO eventually? Because often, you know, the visionary isn't the best person to run the company. What do you think?
Well, you can't run your company forever unless you're Warren Buffett, but with Mark Zuckerberg, he can probably run it for almost as long as Warren. He's got the majority of the shares, he has a good relationship with his board, so much that they just let him negotiate $1 billion deal completely independent of them.
Sure.
They're definitely going to hang around. We're going to be looking at the Zuckulator for a while.
The Zuckulator, the hoodie, it's all going to stay. Okay, let's talk about Groupon, because speaking of IPO fiascos, they're down 9.6% today and hit a low.
I couldn't imagine a lot more CEOs who people might want to get rid of more than Andrew Mason. It's been restatements and confusion regarding their financials. They can't really keep investors on board. They couldn't even put together a secondary offering. It's really not looking very good for them.
Yeah, all right. Moving on to IPO news here. Trulia, which is raising $75 million in an IPO after Zillow went public. So what do you think about the Jobs Act, actually, the pros and cons of you know, obviously letting companies like this file under the Jobs Act under $1 billion?
Right. No, it's a good deal, I guess, for Trulia. It's probably going to be a good deal for retail investors as well. They're going to be going public on the back of Zillow, which is extraordinarily successful this year. However, for other social media companies trying to use that abbreviated pipeline to get public, expect investors to be really wary just based on, you know, the performances of companies like, say, Angie's List. We've also got Pandora, also just like Facebook, down 2 to 3% today.
Right, okay. Let's take a look at the broader markets, Jonathan, and they're just inching. They're just barely making it into the green territory here today. But the big news is that Apple hit an all-time low. Facebook at an all-time low. Apple at an all-time high, I should say. No lie. They're at an all-time high. $644.13. So by 13 cents, they had eked above $644, which is where they were back in April of 2010.
Things are looking great for them right now. They've gotten less than a month. The new iPhone's going to come out. After that, we're going to have the iPad mini debuting, or whatever you want to call it. It's 2 big top-line hits for them, probably coming just in time for the holidays. Expect us to get even higher than this.
All right. Friday with the Jonathans, Leff and Marino. Thanks to both of them. A lot more news that comes out on our Twitter feed. That is at Reuters Insider, and our YouTube channel. Lots of great shows. That is Reuters.com/Reuters TV. We'll see you back here Monday. I'm Lisa Bernhard, and this is Reuters.